Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 8th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. It is NFP Friday. NFP Report just came and went, and the NFP came out at 199K versus 180K estimate, 150K last time around. This right now, that news was initially seen with a flash higher and then a drop. So initial weakness being seen, but still well within this very narrow range here. Super narrow range for the ES. You can see it right here. If you go 12 days back, including today, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You can even go more. Look how compressed it is compared to normal. Just 64.75 points of range. We don't even have 65 full points of range over the last 12 sessions. That's how compressed this thing is. Can't stay that narrow forever. And if we're not going to outright break and go, then what tends to happen is a shakeout in each direction. You get a little bit of movement down, then you flash higher, then you pull back and you're trading, and now the range has widened. So right now, again, building some energy for a move that could be 200-300 points of expansion up ahead. One thing to continue to watch is 4,600. That's the market structure edge right there. You really need to transition through it to open up a move to the next level above. You do have 46.36 half, 46.34 half rather. A push into that level would take out the highs of the year, and maybe if there's a failure at 46, the next level down would be 44. 42 would be the full market structure level down. So big time zone right here, big time compression, still in the range. NFP report is come and gone now, and we'll see if we get some movement out of this range, or do we stay range bound heading into the weekend. Looking at the NQ, right here you'll see the NQ has a similar compression. Very, very narrow, many more days than 12. You can probably go closer to 20-day compression here, starting with this day here. And you can see again how significantly compressed it is. This one right now also holding right at the 16K level, right at the previous quarter's highs. So another consolidation that is developed at these highs. Now, again, given the strength we've had, this market has been very resilient. The ES, the NQ, YM, very resilient markets, and haven't really seen much in the way of downside breaks. So even if we did break down, it could be an opportunity to fling it back up. If we get a new high, it could be an opportunity to bring it back down as this market continues to trade within this range. At the moment, flowing higher within the range after yesterday's market. Today, kind of in the center or at the center of this range with a modest little upside bias. But again, that can change in a hurry given that we are at the center of this range. Should we see expansion from the narrow range, we're looking at easily 1,000 points. 1,000 and 1,200 was our original target range, but now we're looking at perhaps much more than that, given how long of a compression this has become. If we do break to the downside, perhaps there's a move that can take us back across the range. But overall, still stuck in the range, fading the edges until proven otherwise, avoiding the middle chop. At some point, we'll see expansion, or at least an expansion attempt. Taking a look here at crude oil. Now crude has dropped tremendously here into all of the targets we talked about below. The previous year's low, previous quarter's low, and even got close to the 68 target, which is the 100% target here from that key range. So you have the key range high, key range low, key range midpoint. It broke it here, 50% extension. That right there is your 100. It's right at 68. Got the 68.80 on this low. And price right now building out a little digestive range in the previous session. 70.50, the big level here today, above it at the moment. Downtrending price action in the very short term, downtrending price action in the medium term here, and we're currently trading above the previous session's high. That would tend to be an opportunity for bears to defend and reject and maybe attempt to push back down. You can see the downward sloping 8-period average, downward sloping Pima trigger zone. This market still remains quite bearish. However, we are at the spot of the chart where a rejection can happen. we are at the spot of a chart here where a reversal can happen, not only in pure price but also with regards to seasonality. Seasonality right now can put us back up as well, not only into the end of the year but perhaps into the first several weeks, if not the first couple of months of the new year. So if we can find ourselves a strong low somewhere down here, there could be a bit of a reversal attempt here that takes hold. But right now, keeping an eye on the previous session's high for any signs of failure. All right, taking a look now at gold futures. Gold, 4-day narrow range in gold, major day one rejection, huge pivot high at 2150, major rejection of prices above 2080, failure back below the 2060 level. All of these things suggest weakness ahead and likely back toward value. 1950 would be value. Right now we have a very, very narrow range here, and any pullback into this zone here could be an opportunity for a trap in reverse. So any push through these highs could trap bulls looking for a continuation down back toward the midpoint of the previous month and then down toward the previous VWAP down below. Now this market does remain kind of in a bullish up move here, but again, after a major rejection, the flow likely starting to head back downward. Any pullback, any push to a previous high, likely to be defended by bears until proven otherwise. But we could continue to trade back and forth, not really running away from anything just yet. Compression here could lead to a good expansion phase ahead, perhaps into next week. Lastly, looking at the YM. The YM has been super bullish here, very, very strong overall. This week has been super flat and sideways. 1, 2, 3, 4, 5 days sideways. This is last Friday, so this is 6 days trading within last Friday's range. And really, last Friday still engulfs this entire week's range. Maybe this high took it out barely. It looks like it barely took it out here yesterday. But for the most part, very, very compressed over the last 6 days, and we're not seeing any real failure of market structure back down. We never saw price take out a prior low, never really saw it break down. It's just been lifting at a tremendous pace. We are sitting at the third standard deviation above value at the moment, but we haven't rejected it. That's one thing we've continued to mention. And instead, we could be continuing to extend this thing to the next highest market structure level. That would be 36,800 up ahead. 36,800 could be in play. At some point you want to see a strong rejection that could open up a return back toward value. But right now, very strong, consolidating at highs, still in the range, no rejection on either side at the moment. Very much a rest week, and we'll see which way we go here up ahead next week. But right now, still in the trend to the upside, the potential to go grab the next market structure level above. And we just got to wait for some major rejection. Right now, not really showing it, but we are seeing quite the wide range here after NFP. So we are seeing a very high range hourly bar, especially in the ES, and that could help set the range for much of the day. So again, could be mostly range bound again heading into the weekend here, as we have been throughout the early part of the week. And throughout the week, this could build energy for an explosive week next week. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.